Hi everyone, you're all very welcome to another market update video here at the Alpha Capital Group. So this week we'll be taking a look at the markets more broadly, a lot more data and news events coming out this week in comparison to, let's say, the last couple of weeks as we start to approach central bank meetings for March as well. So the next couple of weeks is going to be pivotal for central banks, and of course we will be watching that very, very closely within the markets. Now, of course, we will be looking at the economic calendar shortly. We will also be looking at the FX markets as well, with additional content and information to come later in this week as well, following some of the central bank meetings both tonight and of course on Wednesday as well. So I suppose firstly and foremost, before we kind of go any further, I think it's really important to obviously be realizing of the volatility in the markets and the spreads obviously associated to high frequency or high volatile news events that signals algos, and of course slippage that potentially comes on that. So it's really paramount. That's something that we've kind of talked about a lot in recent videos regarding risk management, regarding discipline, regarding having a clear trading plan and having focus in terms of the execution as well. And that's really something that we duly kind of recommend continuously here at the Alpha Capital Group as well. So I suppose first things first, this week, let's take a look at the economic calendar firstly and foremost. So of course tonight, we have the RBA interest rate decision coming out tonight. Now, we are expecting another 25 basis increase in interest rates. Of course, signaling increasing of interest rates is obviously generally a hawkish thing for any currency. So really obviously depends on the degree to which the interest rates comes into check in the markets, but also the statement that's going to follow. Now, 3:30 a.m. UK time. So I think at Eastern time, it's going to be around about 10:30 p.m. Obviously, we have the next RBA interest rate meeting as well. So whether you're in the US, whether you're in Europe, or whether you're trading in the Asia session, very, very relevant because, of course, we're expecting volatility during the Asia trading session tonight. Now, tomorrow, we do also have Fed Chair Powell testifying at his annual Humphrey Hawkins meeting. So that'll take place for the next couple of days, both on Tuesday and Wednesday. So again, Powell, we know traditionally, anytime he speaks, he tends to move the markets, particularly from a short-term intraday news perspective as well. So if you're trading 1 minute, 3 minute, 5 minute charts, or you're trading fundamentals, obviously very, very important to keep an eye on some of those comments as well, because it tends to have a significant impact upon the markets. So as I said, this week, we have a lot of data coming out. We've got Bank of Canada coming out on Wednesday, of course, with another interest rate decision. They're expecting the first pause in interest rates. Now, of course, if the Bank of Canada decide to, let's say, for example, raise rates by 25 basis points, that is in effect a hawkish sign for the Canadian dollar, the currency itself, and you would expect to see a stronger Canadian dollar off the back of that, given that the expectation is that they are expected to pause. So that's worth keeping a very, very close eye on. As to is the European GDP. Of course, European GDP Q on Q and year on year is coming out on Wednesday morning at 10 a.m. with supplementary commentary from both ECB President Lagarde and also one of our deputies in Panetta as well. So there's going to be a busy couple of days in the markets, broadly speaking. 10 a.m. obviously for UK time for those who are trading the European session, and also the afternoon when it comes to the beige book, and of course Powell and the BOC on Wednesday afternoon. So the next couple of days are going to be incredibly volatile, incredibly busy. Now, we do expect to be back on Thursday to do another video ahead of or following the Chinese CPI on Wednesday night into Thursday morning. And of course, that is something that should also the traders be watching very, very closely, given that the Chinese economy is now fully opening, the resurgence in demand, the pent-up savings that's been witnessed nearly for the last 12 months or so is really being put to use as we see PMIs, we see Chinese growth actually continue to do quite well. So it'll be interesting to see how does that affect, should I say, Chinese CPI figures on Thursday as well for those who are trading, as I said, short-term time frames, your 1, your 3, your 5, 15-minute charts, and also those who trade fundamentals as well. All right, so busy couple of days coming out in the markets, both from a European perspective, from the specific trading session as well, and of course in the US with obviously Fed Chair Powell testifying on Tuesday and Wednesday with a BOC interest rate decision on Wednesday afternoon as well. So without further ado, let's get looking at the charts. So I suppose last week, the big talking point we've talked about in the dollar has been this reaction off of this 105.30 level. So for probably now the last kind of 4 to 6 weeks, we've been very much mentioning the idea of price action getting back up to mitigate this 105.50 level at around about 105.30. And of course, that's exactly what happened. Last Tuesday, we got that very, very clear rally. Thursday, Friday of the previous week. And of course, Monday and Tuesday of last week, very, very clear initial sell-off. Now, since then, we have seen dollar reaction both back and forth. We've seen initial lower lows from those highs that's been created, but we've also had retests or pullbacks into those value areas, as I said last week, coming back in and retesting this 105.15 level on the DXY with a subsequent rejection into the weekly end. We saw indices do quite well into Thursday, into Friday, and of course that allowed that dollar weakness, as we said, back into this 104.25, 104 level. So I suppose that's really going to be the kind of the next phase of price action. Do we actually see a little bit of a recovery around this level on the DXY this week, or do we see that continue to kind of roll over? Now, of course, we talk about what goes down must come back up eventually, and given the very significant dollar strength that we saw through the most part of February, it's not surprising now to potentially see this ultimately unwind this week. But of course, we've got a lot of data coming out. We have a lot of information. We've got central bank meetings. And of course, on Friday, we do have NFP, which we'll be looking at separately as well. So of course, all eyes really on the price action throughout the course of the week to see, of course, how do we close on Friday? But at this point in time, we are very much testing this short-term bottom here around 104.2, 104.10 on the DXY. So it'll be interesting to see whether we get that bearish order flow, whether we get new lower lows. And of course, that's really then symbolizing the fact that we've come all the way back up. We've mitigated this key level. We've created bearish order flow, creating new temporary lows, followed by lower highs, and of course, creating new lower lows. But whether that happens or not, it's very much dependent on how the price action reacts at this very, very clear and very, very important level this week. Now, of course, if we do see that down, we're really kind of looking at price action mitigating the short-term level here around 104, and more deeply having a potential run all the way through 103.80, 104, back down to this prominent level down here, which is around about 103 to kind of 102.50. They become the very two near and medium term downside areas should we see dollar weakness continue this week. And of course, if dollar weakness abates and we see that kind of little bit of recovery back up again, you're really looking to see another test of this 105 level up here accordingly. So that is something to watch very, very closely this week. Now, as we look at something else that I kind of wanted to look at today is, of course, the yields story, or the situation associated to yields, because of course yields is a very, very prominent thing, because of course the investor sentiment towards holding or buying into dollar denominated debt. And over the last number of weeks, as the DXY has rallied, we've obviously talked about that continued rising or continued strength in the 10-year yield as well. And of course, if you look at the daily or the weekly, we of course have mitigated this on the weekly level at 4.02, 4.03%, with initial highs last week coming under 4.1%. So of course, if we do see that kind of abating or kind of pulling back, it'll be very interesting to see how does that tie into broader markets like the stock markets, like the indices, and of course the dollar broadly against its compatriots in the G7 and G10 space broadly. Now, if we look at Euro USD, first and foremost, so if we look at Euro USD, I think the first key thing we look at from a price action perspective is order flow, because order flow is really the most important thing here, because that really determines price action. And as we know, price action is the continuous battle between buyers and sellers in the market. So whether you're buying euro dollar, whether you're selling euro dollar, that's what price action is. It's that kind of movement up and down between, I suppose, the buyers and sellers debating of which way the markets are going to go from a directional bias. Now, of course, last week when we talked about this, this kind of 105.30 level, we talked about it very, very prominently, not just last week, but also the last few weeks. And we kind of really watched this 105 level very, very closely as well, because of course, last week we talked about the daily area around 106, but more broadly, this area between 106 and 105 being very, very important. Now, of course, last week we did see that bottom coming through at around about 105.40, followed by successive short-term highs. With short-term highs, a bit of a pullback, new highs again, a further pullback. But this is where the multi-time frame approach comes into play, because of course, when you look at the multi-time frames, you can see how we've gone from a very clear selling directional bias back into this value area between 105 and 106, and subsequent higher highs, higher lows. Now, last week as well, you can see also very, very clearly short-term high, short-term low, higher high, price action erodes very, very quickly and comes back all the way to where that crossover in sentiment takes place. So that crossover in sentiment is really, really very important, because that tells us where the order flow is. That tells us where the liquidity areas, the value areas, the points of interest, the order blocks. And that systematically is very, very important, because as we know, the markets won't always trend in one direction. They won't always go higher. They won't always go lower. And that's what price action is. It's that continuous battle between buying and selling, higher highs, higher lows, lower highs, and the trending directional bias in the markets. When you look at short-term profit taking, the medium to longer term bias as well. It's all cycle analysis. It's all interrelated within the relationship of the markets. And it's very, very important to be aware of that. And of course, you'll see very, very quickly price action comes back to this 105.75, 105.80 level, and has rejected this perfectly, only to create new highs again marginally today. Now, that's, I suppose, the really big thing is because, of course, as you look at the DXY, broadly, we are testing or holding these short-term bottoms. And as you look at your USD, on the inverse, is testing or holding these short-term tops as well. And that's really, really going to be the next move is, does euro dollar progress through 107 and really continue turning higher again? In line with a potential dollar weakness. Now, of course, if the DXY weakens, that's really the next key thing. You're looking for euro dollar to surpass 107, look for that order flow, looking for 108s, and then really looking to see, well, is the price action going to continue higher? Because, of course, in the daily trend or the weekly trend, you can see very, very clear weekly sell-off in 2021 and 2022 into a bottom in the autumn of 2022. And we're now seeing very, very clear signals of bullish intent as we create higher highs, higher lows within the order flow here. And I think 107 tomorrow should be a very, very pivotal level to watch out for. Now, if we look at 1 hour price action as well, let's look at this 107 level here on Euro USD with close intent, because of course we can see here, as I said, we've made higher highs, we've made higher lows, we've had a very, very clear signal move higher, creating those short-term tops. So if you can see that there, we can kind of see how we've just about marginally broken through the highs and is now back underneath. So I suppose from a short-term trading perspective, if you're looking to go long, you're either looking for clarity where price action's breaking above this level, or you're merely waiting for price action to return back into the most previous liquidity area, which is going to be around here around 106.25. And then you're looking to see if there is that subsequent reaction broadly beyond that. Now, of course, that doesn't necessarily mean we buy off of there, but we are watching price action very, very intently to give us very, very clear signs of whether we do want to buy there or not. And I think that's where the likes of the DXY comes in to reinforces the viewpoint to say, well, dollar strength, V dollar weakness, and then being able to cyclically correlate that back into the other asset classes like Euro USD, like GBP USD as well. Now, speaking of GBP USD, we can see how the markets has been very, very clear over the last number of weeks. Obviously up and down between 119 and 124, broadly speaking. Let me just go full screen for a second. And of course, we have that analogy of what goes up must come down, because of course we've short-term highs, pull back, broadly back into the highs as well, fully mitigating that initial impulse, consolidating, getting a very, very aggressive break of this consolidation region, and of course, break of structure, creating this bearish order flow back into this choppy 119.50, 119 area down here, and up as high as 121, 121.50, because of course we've got lower highs, marginal lower highs, retest of equal highs pretty much there, and of course we've got retest at bottom. So we're really looking for price action to give us a clear directional bias, because in the 1 hour it's very much back and forth over the last, let's say, 2.5, 3 weeks in the pound dollar. We're very much kind of cyclically up and down, very much retracing and very much in consolidation. So we need to see a broader break of this region really to give us a clearer directional bias as to the next phase of price action. I suppose that's really the range that we're now at, because of course short-term price action is very, very nice and corrective, but as we speak at the minute, we are pretty much midpoint between short-term highs of the region at 121.40, 121.50, and short-term lows down here around 119, 119.20 as well, broadly speaking. So on the daily, although we can see a bit of a bottom coming through, we would look to see if that aggressive move is going to come back up and really have a go at this 123, 124 triple top, further retest of this value area up here accordingly. And of course, that would factor in with, as I said, that weaker DXY play. So if we start to see that weaker DXY play, we should really be looking for the pound to really aggressively try and break out through this region and ultimately try and progress back into this upside region up here. Now, of course, that's very much dependent on, as I said earlier, this DXY reaction. And of course, watching that very, very intently, because of course, if we look at the daily time frame for a second, albeit a massive wick rejection, but the 4 hour very, very clear. Daily is trying to break through and get a bearish engulfing as well. So bearish engulfing today is really springboarding that potential for dollar weakness through the course of the week. But of course, let's see how that one plays out with all of the fundamentals coming through as well. Now, Aussie USD. Aussie USD is very, very interesting because, of course, last week when we talked about the price action coming down, we talked about this staggered, very, very clear order flow. We mentioned this 67.50 level pretty intently because, of course, we mentioned this order flow area. We had crossover and sentiment down here just above 67. We had that steady grind higher into short-term highs before we had that kind of blow off top all the way up to the 71.50 level, ultimately before the price action rolled over and came back into this level. Now, broadly over the last week or so, price action has been very consolidated. A number 1, 2, 3, 4, 5, 6 daily candles, in fact, where the price action has been in a kind of the 70, 75 point range. And of course, if we look at the 4 hour as well, you can see that very, very clearly price action back and forth between this region. So within that, then you're really identifying the consolidation structure. You're really now looking for the next phase of price action and seeing, can the price action, if we DXY goes lower and we see that weakness, then you're really looking for the Aussie to make a correctional turn and really try and break out of this region. So as I said earlier, the next directional move in some of these assets is really dependent on how the price action breaks out. Being able to either set alerts or watch the price action as it breaks out of these regions, and then trying to find entry parameters that matches your strategy. So whether you're smart money, whether you're supply and demand, whether you're Elliott wave, your market profile or volume profiles, whether you're news, whether you're retail trading patterns, it doesn't matter, right? You need to be able to reconcile the price action in terms of a bias, and then making sure that you have very, very clear entry predictions or rationality, whether you want to buy or sell on those specific assets as well. But at this moment in time, very much tied in this region, following that daily mitigation, as we talked about last week, down here between 67 and 67.50 from even 2 weeks ago as well. So worth keeping a very, very close eye on that region as well. Now, last in the FX space is dollar yen. So similar with the pound dollar consolidation or chop and volatility, dollar yen has also been very choppy, very, very consolidationary off of this 137 level. Now, this 137 level is coming very, very clearly off the 4 hour charts because, of course, 4 hour very aggressive selling into stagnant and very, very clear order flow. Lower lows, lower highs, lower lows, back into equal highs, new lows before price action accumulates. And then we get that breakup. We get that breakup out of this consolidationary region here, only for the price action to come back down marginally into the lower levels of this region. Now, of course, you would have liked to see a deeper retracement really back into kind of 129.20, 129 really. Of course, didn't get there, only got to 130. And then we saw that massive onslaught of dollar yen strength in the last couple of weeks as we fully mitigated all of this bearish order flow. And of course, where has the top formed, as we said, at this 137 level. Now, structurally speaking, if you were to look at a retail trading structure, you would see that price action now is becoming increasingly consolidated. We've had first wave, we've had a rejection, we've had a secondary wave. So there is a potential, what retail traders would say, a head and shoulders pattern being created on dollar yen as well. I don't like to create the charting patterns too much. I like to look at the order flow and the liquidity more so. But even as well on the 1 hour, you can kind of see that first peak, pull back, secondary peak, pull back again. So really now waiting to see how does the price action react from this previous short-term internal structure up here, and seeing can the price action get a reaction from this 136.60, 136.90 level. So this should really become the focal point for price action over the next, as I said, next couple of days to see if there is any sort of reaction, as I said, up in this region up here. So keep an eye on that one this week as we look at dollar yen. Now, of course, any bullish break really above 137 is therefore elongating the process. You're therefore expecting dollar strength to continue. And of course, you're looking for a probable recovery from this 104 handle, most likely all the way back into 105. So if you're buying dollars, that's what you probably should be looking at there in dollar yen. Now, moving across the gold has been a little bit interesting given the weaker dollar play. And of course, this very, very clear run and reaction from this daily area here around 1810, 1820. And of course, over the last few weeks, we've been talking about the 1810s. We've been talking about the 1790s. that kind of $20 region. And of course, last week we got a very, very clear reaction from the upper levels at around about 1808, 1810, 1812, with a subsequent move all the way very, very quickly back up into this 655, 56 level. Now, when you look at order flow, structurally speaking, and of course, this is where the ability to be able to read price action is ultimately so important, because of course, on gold, very, very quick 2-3 day snap in pricing, fully undoing a lot of this bullish order flow that we saw through the end of January and the most parts of February, and of course stepped and tiered price action to the downside. You can see that as well very, very clearly. Short-term lower lows, lower highs, bearish order flow continued to create its way until it found a bottom. Now, of course, this resting place down here around 1810 is systematically very, very important, because of course you can see how we've got very, very clear order flow, clean as anything, and then we have that very, very clear break to the upside. And of course, this initial impulse to the upside has started to take out some of these short-term lower highs. So this order flow here has been fully taken out, and the price action did get back into this, as I said, 1855, 1860 level up here, and has mitigated this decisional area here, I suppose, around about 1855, more broadly speaking. Now, we have seen a little bit of a selling coming off again, and that's again not just the correlations, that's been able to look at price action, because of course structure will say, well, if we do break significant order flow to the downside, like for example this encapsulated region here, then the most likely scenario is after we break through that structure, price action does return to the downside again. And that's alluding to the fact of price action, supply v demand, buyers v sellers, not just the correlation in the markets, or not just what's back happening within the news as well. And of course, despite the dollar weakness today, we actually have seen the gold prices, XAU USD, actually come off, which is therefore kind of emphasizing or kind of alluding to that matter as well, broadly speaking. So I think at this moment in time, if you look at kind of short-term progressional price action, very, very clear bottom forming with aggressive price action to the upside, undoing the price action. So you're looking to see kind of as the price action sells off, where is it going to settle? Well, you've got an area here around 1830, 1835, or it actually could come a little bit deeper and make an even deeper swipe of price action to try and find a bottom somewhere down here around maybe 1820, 1825 as well, which was a previous short-term price action as well. So those two levels, I think, should become systematically the focal point. If you're trading gold this week, keep an eye on both of those regions as well. And of course, we'll see how things play out on Thursday as the markets develop for the week. Now that then brings us into the indices. So last week we talked about the S&Ps. We actually said very, very vividly, as the price action was selling off, keep an eye on this region here around 39.25, 39.30 to see if there is any sort of reaction. Of course, Tuesday, Wednesday, Thursday, Friday of last week, we did get very, very clear selling, only for the price action to react on Thursday and actually close quite strongly on the weekend. Now, of course, what do we see? Bullish order flow, again, higher highs, higher lows, higher highs, 3 phases of bullish price action, particularly in the 4 hour. You can kind of see that there as well. First phase, second phase, third phase, short-term top, downside break of structure, pull back to mitigate the order blocks liquidity, allow for that deeper decline all the way back into this daily region. Very, very clear tiered selling price action. Price action breaks up to the upside on Friday, taking out this bearish order flow. So naturally enough, we're looking to see if there is any sort of pullback, consolidation or move to then allow that deeper move. So I think this is where it's going to get interesting, particularly from a short-term perspective, because if you look at it on the daily perspective, DXY is obviously trying to break new lows. 4 hour structure, very much holding this bottom. So we have to kind of look at everything individually and then try and put the puzzle jigsaw pieces back together. But if you look at S&Ps, daily area fully mitigated, 4 hour structure taking out this order flow. So break of structure has really been confirmed as price action has taken out all of this liquidity up here. So naturally enough now, given that we've broken the order flow, given that we've broken kind of structure, looking to see can the price action get back down, and really you're looking at this value area here between 39.50 and 39.75. So that's really kind of the area that I'm looking at this week to see, can we get another stage of buying in the indices from this region. And whether that plays out or not, let's wait and see. But at this moment in time, that's kind of the move that I'm looking for in the S&Ps, and correlates very, very nicely with this daily viewpoint, whereby we're creating bullish order flow, we're creating pullbacks, we're mitigating the value areas, the key important points of interest, and we're getting those very, very clear bullish reactions. And we've mentioned that both last week and, of course, over the last few weeks on different assets, broadly speaking. Now, as we move across to the rest of them, Nasdaq again is making a very, very clear secondary impulse. We've had, again, we talked about it last week, clear structure, break of structure, price action comes back up to mitigate. 1 hour was very, very clean, and we talked about that last week. And of course, you can look at last week's video for that. Clear bearish continuation, steeped and kind of structured order flow to the downside, only for the price action to make that aggressive break initially, taking out all of this kind of bearish lower low, lower high trending price action. Now, again, structurally from there, seeing can the price action get back into this value area, and then looking to see can the price action then pull back into this region up here again between 12.6, 12.8, but don't really be ruling out an area up here at 12.7, 12.650. I think that becomes a very, very prominent level. And of course, when you look left, there's a lot of price action up in this region. And of course, when you look at the daily price action for a second, let me just go to a daily chart. You can see daily order block point of interest here just underneath 12.6 level. So 12.6 does become a very, very interesting level. Now, whether we do aggressively continue into 12.6, that's really going to be the next big thing, or whether we actually pull back, mitigate this kind of 2-3 day bullish snap from Thursday, Friday, and obviously Monday, and then allow for a secondary phase tiered pullback into this upside at 12.6. So there's your two different scenarios there for the Nasdaq and the S&Ps. Now, of course, last but not least in the US is the Dow Jones. And of course, we talked about it last week. Let me just hide this for a second. Again, very, very clear structured price action initially at the end of February, as we talked about last week, then structured lower low, lower high order flow, breaking out through this region over here in December highs or year-end highs. And of course, came down to test this 32,500 perfectly, and you can see that very, very prominent reaction from 32,500. Now, as we said, price action had held this previous consolidation, of which broke structure into this bearish structural order flow that we saw through last week, lower low, lower high continuously until we found a bottom. Price action broke out to the upside, came back down, fully mitigated this area here from the region. Now, of course, you can see that from consolidation. Very, very clear. Let me just draw the consolidation region just for those to visualize it. Clear consolidation, breaks out to the upside, comes back down to the value area, mitigates it perfectly, and then springboards this very, very deep buying opportunity late Thursday into Friday, and of course into today, where we have formed initial tops again off of this key price action level, which of course was 33,500. And if you turn left, you can actually see that. Just drag this across. Very, very clear reaction from this 33,500, 33,600 level, where the price action has rejected today. So no surprise there that we've come off into a little bit of selling into the close. Now it becomes a case of, well, if we take out this short-term bottom here this morning from today's lows, yesterday evening's closing lows around 33,300, and then you're really allowing for that deeper correction back into some of these regions at 32,800, 32,900, similar to the Nasdaq, and of course similar to the S&Ps as well. So that those short-term bottoms, as I said, 4.0, if you're looking at the S&Ps, 4.035-ish, Nasdaq, this area here around 12.7, 12.250, 12.275, those short-term lows from today become pivotal, because of course, if those bottoms give way, then you're really looking for that deeper retracement back into those value areas at 12,000. And as I said here on the S&Ps, at 39.70-ish region as well. So keep an eye on that in the US space. And of course, Dow Jones as well, you've got 32,900, 32,600. Should we see short-term bottoms being broken out from today's lows? So keep an eye on that. And that then brings in potential for dollar recovery off of this level here, which then brings the dollar coming back into this 105 handle again, which in turn means that some of the FX pairs come back into that 106.20 level, potentially, as we've talked about as well. So you can see how the different markets, the different viewpoints are now starting to flow a little bit more seamlessly. And I think that's important. And when you can look at 2 or 3 different asset classes, you can start to get a bit of a picture as to sentiment, direction of bias, because you're looking at the relationship that the dollar has with the stock markets, with gold, with the FX markets, with the yields, and then being able to kind of tie all of that back together from a price action perspective. Now, of course, in Europe, DAX has very, very clearly been bought up, obviously, with Thursday, Friday, with that indice strength. We've obviously seen DAX come back into that area around 15,700. Really, again, similar scenario. Consolidation last week, but although we had lower lows, lower highs in this order flow, very, very clear breaks. So you're really looking for price action again to come back into this 15,300, 15,400 level, which has been fairly much the consolidation region over the last, let's say, month or so from the early parts of February as well. Euro Stoxx, similar scenario. Again, if we look at order flow today, very, very clear. Obviously, bullish price action. Didn't even get back to this 41.20, 41.40 level we've talked about. Clear bottom formed on Thursday. Massive reaction, taking out short-term highs around about 42.75, 4300, and of course, eclipsing previous highs, breaking structure up around 43.20. Now, as I said, similar to the DAX, similar to those Nasdaq Europe, US indice moves, starting to see that little bit of an impulse coming back down to these value areas. So of course, we start to see that structure breaking down from a short-term perspective. You could actually see the price action in Euro Stoxx coming back into this 42.50, 4,200 level. So keep a close eye on that. And more prevalently, actually, when you look at the order flow, you can also see from a short-term perspective, price action today consolidating. Let me just bring this up. Very, very clear consolidation. We have price action breaking structure, price action coming back up to the short-term liquidity level, and is starting to sell off. So this is kind of giving me the viewpoint now that the likelihood is now Euro Stoxx is going to continue drifting lower into tomorrow's open. And then if we can break through previous lows from today, then you're looking for that 42.50 level, which is a nice 50-60 point move on the Euro Stoxx as well. And I suppose if you're looking at 15-minute charts, that ties in pretty much very nicely with the 15 minutes. Again, gap down, short-term highs of the day, break structure, back up to value area, and we're drifting off as well very, very nicely there on that one as well. So that's interesting. And of course, FTSE, similar scenario on the FTSE. Let me just simplify the charts again. Really looking to see the 78.50, 8,000 region. Of course, we did get that very, very clear reaction, broke structure to the upside, and of course today came back down and fully mitigated this 4-hour level here at 7,900. Now, of course, that's a little bit optimistic because, of course, when you look at the order flow, we've got break of structure, lower low, short-term lower high, lower low, lower high. And of course, it does look like the price action could very easily try and run back into this region again, because of course, you look at the short-term price action structure. That's why medium time frame, shorter time frame is very, very different, because of course, the markets move in different price structures on the different time frames as well. It's all cycle analysis, short time frame cycles, medium time frame cycles, and longer or medium to longer term cycles as well. So just the cycle analysis is very, very relevant there in that one. Now, of course, keep an eye on this to see how does the market develop. But I definitely think your Euro Stoxx, your DAX in Europe are probably your cleaner plays, your easier plays, given the volatility. And I'd even say Euro Stoxx over DAX looks the cleaner play. And of course, in the S&Ps, Nasdaq, and Dow Jones, seeing do we break through those structured bottoms, because that allows for that little bit of a recovery in the euro, or a little bit of recovery in the DXY short-term pullback to some of those value areas. But of course, let's see if how does that dynamic play out over the next couple of days or so in the financial markets. So that's pretty much it for this evening, everyone. Of course, thank you for watching. If you do like the content, feel free to leave a comment, click the subscribe button, but also make sure you get access to the notifications, because of course, when we upload the videos, once you have the notifications ticked, you will get the video straight away into your feed as well. So making sure you're getting the content, and of course, you're not seeing it maybe 2, 3, 4 days behind time as well. All right. Have a great week, everyone. Trade safe, and we'll see you all next time.